Trump's tariff bombshell, Rick. What in the world are we going to do? When we are filming today and we're 6 days out from Liberation Day, I'm not sure many Americans feel liberated, Rick. What in the world is going on?
Well, I think there's an awful lot of confusion in the market right now. We're certainly seeing that in stock market gyrations. As we're recording this today, the stock market, the Dow started the day by being up about 900 points, and I believe is ending the day underwater. So even investors in the stock market don't really know exactly what to make of the current situation. But consumer confidence has been going down for the last few months. I suspect consumer confidence will fall even further as we try and kind of sort out what all of this tariff conversation ultimately means to the consumers and to the broader economy.
So, investors in the housing market, is there anything that they should be concerned about in the short term, the next 30 to 60 days? They're under contract, they're going under contract. What should they be thinking about in the immediate future?
So it's a really good question, Jeff. I think if you're an investor looking at the residential real estate market right now, uh, the the uh, the tendency might be to worry about increased construction costs, increased labor costs. But to your point, a lot of that's more of a future issue than it is a current day issue. I think what investors really have to be concerned about short term is consumer psychology and whether this uncertainty will actually uh, lower a person's inclination toward buying a house, toward entering into a new rental contract and a new lease. And I have been hearing anecdotally from real estate professionals across the country that appears to be happening at least a little bit, where prospective home buyers have decided to kind of hold off and wait and see how things go. Even prospective renters are reluctant to enter into a longer term financial agreement because they're not really sure what the financial situation is going to be like going forward. Are we going to continue to see inflation go up? Are we going to see unemployment numbers go up, as has often been the case in the past when tariff strategies have been implemented? So I do think you have to kind of bake that into your numbers a little bit. If you're a fix and flip investor, what's the appetite going to be like for the next few months in terms of prospective home buyers during a time of the year when normally we're seeing a lot more home buying activity. So it's less about the price impact on your costs and on your margins from the tariffs, and I think more about consumer psychology and a home buyer's propensity to move in uncertain times.
Yeah, certainly, whether it's the equity market, the bond market, and certainly the housing and commercial investment market, it's been proven over time that those that keep their heads while everyone else is running around trying to figure out what in the world is going on, it usually pays off. Now, sometimes folks do say, yeah, but Rick, this time it's different. Is this time different, or should we keep a clear head?
Well, sometimes, Jeff, two things can be true at the same time. And I think what you just said is spot on. People do need to keep a clear head. The worst thing to do during a time like this is panic. It won't do you any good anyway, and it'll just get you stressed out. And very often people make terrible long-term financial decisions during a moment of panic-induced weakness. But the other thing that's probably true this time, Jeff, is it probably is different this time. We haven't had tariffs at this level since the 1930s. And that led up to a time period when we were trying to dig our way out of the Great Depression. So while I'm not suggesting that the tariffs are going to lead to a depression or even a deep recession, this time is a little different than what we've seen in more recent cycles as the financial markets have gone through their gyrations. But if you're financially able today to buy a home, and you're planning to stay there for some extended period of time, it's not a time to retreat either. It's time to move forward cautiously, but don't retreat because we haven't seen really much in the way of fallout in the housing market in terms of prices. Sales are running right around the same rate they ran a year ago, maybe a smidge higher in terms of sales volume, and there's still not a ton of supply available for sale. So if your long-term plan is to be a homeowner in a certain place, you found a home that you really like and you can afford, don't let all of the chatter throw you off your game. In times like this, sometimes real estate's a better investment than being in some of the financial markets.
Perfect. Thank you so much, Rick.